Hey everyone, my name is Jack Chapple. I upload business, entrepreneurship, and investing videos pretty much every single day, so hit that subscribe button and hit that like button. Now today we're talking about 4 reasons why you shouldn't invest in the stock market. Now I just want to preface this all by saying that most people should invest in the stock market, okay? But here are 4 reasons why you shouldn't, why some people shouldn't invest in the stock market, and why actually a lot of young people specifically shouldn't. Okay? Now, I just want to preface this all by saying that it's better to invest than to not invest, but here are some scenarios when you shouldn't invest, okay? We're going to start off with number 1 here. And this is probably the number 1 thing I want to get through you guys' head right now. What I want to get through your guys' head is you have an income problem. So investing to increase your income is usually a better option for a lot of people if you're not making a lot of money. And so let me break this down for you. If you're making, I don't know, $25K a year or $30K a year, and you're living paycheck to paycheck, and you're being responsible with your savings, maybe you have a spouse or a kid or something, and you're trying to support everyone, and you don't have disposable income every month, or maybe your disposable income is only $50, then you shouldn't be using that money to invest in the stock market. You should be using that money to either start a side business, to get a better job, to increase your income, to learn new skills. So that is the number 1 reason. You shouldn't be investing in the stock market if you don't have enough money. I always say, I think that there should be a general rule of, I always say that invest a minimum of $500 at a time. You know, I would say that if you have a disposable income of maybe $400 a month or $300 a month, then that's when you can start investing in the stock market. Seriously. Maybe $200. Now, if you just want to start off and you're really young and you're 18 years old and you just want to try it, then sure. Then just go for it. Invest once and see what happens. However, I would say it's much more important to try and increase your income from 25K or 30K to 40 or 50 or 60K. And then all of a sudden, think about that. If you were able to do that, you're able to increase your income from 30K to 50, and after taxes, maybe you have an extra 10 to 15 grand a year to invest, all of a sudden, that's real money. Then that's stuff that you should be investing in the stock market. Okay? So that's the number 1 reason why, is that you have an income problem. It's better to try to raise your income with that $50 a month than it is to invest it. Okay? So that's number 1. We might come back to that. I might talk about that a little bit more. But we're going to move on here. Number 2. Number 2 is that you're bad with money. Oh, yeah, that is an M. Bad with money. All right, so this is someone who wants to invest in the stock market but doesn't want to do their homework. They don't want to do their homework at all. So these are the kinds of people that want to invest just for the sake of investing because they hear it's the right thing to do. So they'll go up to their financial advisor, he takes a cut of their money, he invests it in a stock that he gets paid a commission to invest it in, they take a fee, and at the end of the day, on your money, you make 0.5% and you don't keep up with inflation. So if you're bad with money, and maybe some people invest too much money. I mean, I know some people that have 10 grand or 8. I've had messages from you guys that have people having 6, 7, 8 grand in the bank, and they want to invest 6, 7, or 8 grand, right? They just want to have $500 left in their bank account. That's not good. You got to have some sort of emergency fund. Some people are bad with money and are just not good with investing. Now, another thing too. Maybe you're investing and then, you invest in a stock, but you just don't do any homework. You don't look at any charts. You don't look at their earnings. You don't know what the company is. You know how many times I've talked to people that have invested in companies and have only read the description of the company and that's it? This company is an oil company. That's it. They don't look at how much debt they have. They don't look at, now, sometimes you don't need to look at that stuff. Sometimes you don't need to go beyond a paragraph and a chart. if you know a lot about the company beforehand. Like, guess what? You know, I don't need to look too much into buying a McDonald's stock or into a bank stock or to a Google stock or an Amazon stock, because I know what the company's about. But I do like to dig a little deeper. So generally, yeah, you're bad with money and you don't do your homework. Here's the other thing too, is that, you know what, maybe we should move on to the next one here. You know what? No. We're going to hit one more point on this one. If you're bad with money. So if you're investing in a stock, and then because you're bad with money and you're bad with investing, this stock starts to go down, and then what do? You get worried, and you sell it because you're bad with money. Don't take a loss. There are very few scenarios where you should take a loss. I remember I always talk about the one time where I was completely okay with taking a loss in the stock market. I'm of the strategy of you buy a stock and you buy more of the stock. Okay, now there's always exceptions like BlackBerry and like Intel, or is it IBM? I don't know, one of those that peaked in the 2000s. Like, there's always cases like that, like tech stocks, where it might be a good decision to sell. But for me, so I had a Canadian oil stock, and I remember this was before fracking became a thing. This was like 2012, 2013, 2014, somewhere around there, before fracking became really big. And so I had this Canadian oil stock. It was doing okay. I think it was about even for what I bought it for a few months in. And I remember my friend talking to me. His name was Imran. He's like, man, this fracking thing. Like, can you believe that they're about to go through with this in the States and Canada? And I was like, what's fracking? I go home, I Google it. Fracking would dramatically increase the amount of oil supply in the world. Dramatically. And so what do? I'm like, okay, I'm getting out of this business. That's risky. Maybe it could be good for my company. It's probably going to be bad for my Canadian company. So I sold it off. I took essentially like what? I forget how much of a loss it was. Wasn't it like $50 or $30 or something? I took a very minor loss. So there's always those cases where it might be a good idea to sell. But for the most part, like if you're selling during a recession or a stock market correction, that's not good. Just hold on to it and buy more during that time. So if you're bad with money and you're bad with investing, it's not a good idea to invest. Surprise, surprise. Now we're going to move on to number 3 here. So this is, I'm going to say gamble and quick money. If you are going into the stock market thinking you're going to get rich, you have another thing coming. If you're going into it because you think it's going to be fun, you got another thing coming. By investing in the stock market, there's a lot of pain that comes with it, a lot of pain. But you shouldn't be going in to gamble with your money. You shouldn't be going in looking to make quick money. You should be going into investing in the medium to long term. 6 months minimum to 10 years to 20, 30, 40 years. That should be your plan. That's how you should invest. And so you got too many people that go into penny stocks. I mean, I was on Reddit recently, personal finance subreddit. You guys should sign up for that, by the way. There's go onto Reddit. There's r-personal finance or Personal Finance Canada too. And you can see a bunch of financial tips on there. So I highly recommend that you guys go and check out that subreddit. Hundreds of thousands of people tell their stories and tips. So there's always one that pops up every month about about penny stocks and about how one guy I was reading today actually lost $24,000. He had $26K saved up. He lost $24K in penny stocks. Okay? That's usually what happens. Now, I always say that for every one success story in penny stocks, there's 9 failures that you don't hear about. So never go into penny stocks. Ever, ever, ever. So if you're going into investing thinking that it's going to be fun, you get that high, right? When the stock goes up, you get that high. I mean, I invested in some stocks yesterday. I invested in one stock where I bought 12 of them, and they each went up like $1 today, which is only $12, but still. I mean, that's still money. It's still $12 more in assets than I had yesterday. Right? That a lot of people get that high feeling from that. I don't. I don't at all. You're right. So that's actually going to move on to the next point, I guess. But a lot of people going and looking to gamble and to make money, that's not how you should be going into investing. So number 4 is you're emotional. Emotional with money. You're emotional with money. This is the worst thing possible. All right, this is from the Kevin O'Leary investing strategy, actually, is that he says that if you're emotional about your money, you're going to go broke. Money is a tool. All right, money doesn't care about you. Money doesn't care about you. You might care about money. Money doesn't care about you. Money doesn't care if you lose all the money. All right, money is just a tool for you to invest properly or to not invest properly. You can lose it or not lose it. Money doesn't care. Money goes to where it can multiply. That's where money goes. So if you're emotional with money, you shouldn't be investing, period. I mean, I was talking to one of my university friends when I was investing in the stock market and made lots of money. It was, second year university? Somewhere around there. And they always say, like, man, I don't want to, they have fear. They have fear, right? They have fear that the stock market's going to go down. They're too tied to their money. They're very tied. They're so tied to it. Like, man, I don't want to invest $1,000 and have it go down to 500. Well, it's going to probably bounce back up in the next 5 years if you just hold on to it. And so one of the things that I like to do is invest in the stock market. Is if you're going to invest in the stock market as if you couldn't make another trade for 10 years. And so everyone has like a stock. Oh yeah, everything's going up today. I just looked at the stock market app. So there's the stock market app here, and I do look at it. I do like to kind of keep track, but for the most part, I don't care. I don't care at all, really. Because the stock market goes up and down every day, up and down, up and down, up and down, and I think that no matter what happens, I'm not going to sell anyways, so what's the point of looking at it? All right? And yeah, so just don't be too emotional with your money. It goes back to selling for a loss. All right? If your stock goes down, don't get worried. I mean, one of my stocks went down, I don't know how many shares of it I have, like 8 or something. One of my stocks went down, 50 cents this morning. And I had 8 of those, and now they're up $2.50 a piece. Like, and I just checked today. So what I'm trying to say here is that you can't be emotional. You shouldn't be checking your stock market all the time. If you're investing in stocks, you shouldn't be checking your app 24/7. Maybe check on it once a week, once a month, once every month or two. But at the end of the day, you just can't be emotional about money. Once you make that trade, just cut loose. Actually, one of the things, here's a tip. So, do you know one of the reasons why I do invest in the stock market? Is because it makes me poor. Isn't that funny? So one of the reasons why I like to invest in it is because it goes out of my checking account and it goes into my investing account. And all of a sudden, my checking account has thousands and thousands of dollars less in it, and so I have less to live on. That's one of the reasons why I like investing in the stock market, is because it makes you feel poor. The money is not in your checking account anymore. And so I don't know if you guys feel the same. So what happens when I invest in the stock market? The money in the back of my brain, it pretends it's like dead. It's dead, it's gone. And it makes you feel like emotionless about money if you think about it like that. That once you if you invest in a company, if you have that feeling of you've lost several $1,000s right then, if you can get over that feeling, then you're going to be a great investor. That's how I've made tons of money. When I invested in Apple and tech systems and Nike and whatever hell else I invested in second year university, every time I made that investment, I felt like I lost money. And then within 7, 8, 9 months, like I almost doubled it. I think I had an 84% return that year, which is pretty nice. So if you're emotional about money, no point in investing in the stock market. Don't get emotional. So we're going to just overview these here. Income problem. I just want to stress this one more time, guys. I get so many messages about how, you're making 25, 30, 35K a year. You're saving up $100 a month and you want to invest in the stock market. That's not how it works. That's not how it works. You should try to increase your income, increase the amount of disposable money you have to invest every month. I don't know what that number is for you. Some people, you can live paycheck to paycheck on. I was reading this article recently about San Francisco, about low income now in Silicon Valley and Bay Area and lots of parts of San Francisco. Low income is $104,000. To be middle class there, it's like $140K. 140, 150K, middle class. So, I mean, that number for you to be comfortable and to start investing, that's different for everyone. I mean, if you're living in a flyover state, a town with 500 people, and you're making 30K a year, I bet that goes a long ways, and you can probably invest in the stock market. But if you're living in New York, or Toronto, or Vancouver, or Tokyo, or London, or San Francisco, LA, if you're living in a place like that, and you're making 50K, I mean, you're poor. So you got to focus on increasing your income first for a lot of you. And so I want to drill that into you. And actually, another shameless plug, that in my Wealth Accelerator, I talk about that a lot, about starting a side business, what it takes, how to sell stuff, things along those lines. So you can check that in the link below. It's free with my stock market program. So if you want that, go check it out. 2, yeah, bad with money. If you're bad with money, then why invest? Why invest in the first place? Bad with money and emotional with money are like hand in hand. Because usually if you're emotional, you're bad with money, and usually you're bad with money because you're emotional. And so number 3 was that, yeah, you gamble. You want to make quick money. And you'll be disappointed if you want to do that. It's very, very rare that you invest in a stock and then it skyrockets in a week. That just doesn't happen. Sometimes it'll skyrocket in 2 years. That's what happened for, which one of my stocks did that? I think it was one of my iShares stocks. It was my first stock, I think. I think I bought it for like $11 or $12. And it was paying me like a 4% dividend every year, which was nice. And then like 2 years down the road, it went up like $3 in a day. And I go, and I owned tons of those. I mean, if it was $12 a stock, I probably put in at least $1,500. Which was a lot for me back then when I was 18 and just got my corporate job. So do the math on that. But I mean, sometimes stocks can skyrocket, but they're just not in your control. They're not in your control. So I think that's going to wrap this video up. What do you guys think? What do you guys think about these? What are some other reasons why you shouldn't invest in the stock market? Because one of the reasons why you shouldn't be afraid, double negative, is because of a recession coming. And I've talked about that. If you plan on investing for 5 or 10 years, if you invest at the peak of the market right before a recession, you're still going to get a good return over 5 or 10 years. So that's not a good reason. But what are some other reasons? These are just the 4 ones that I've seen from friends and family and things along those lines. So that's mine. Anyways, it's going to wrap this video up. I'd like to thank you very much for watching. Remember, check out my stock market program in the link below. You get a $197 program for free if you sign up. So yeah, go check it out. And I also gave I'm giving stock breakdowns there too, like I did Google and Amazon recently. So I'd like to thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.